Now let's put out what could be called as election-proof portfolio. So we've really urged our experts here to give some of the top ideas and which could be called as evergreen ideas where they're happy to own them irrespective of the election volatility. So I'll start with you, Bhasin Saab. HDFC Bank, Coforge and Vodafone. HDFC Bank, some would say, is slightly easy to understand, but your choice of Coforge and Vodafone, why are they part of your election-proof portfolio?
So clearly, HDFC Bank, like you said, will stand out, since I think if there is anything to do with negativity, it will still be one of the best plays. Coforge, I would say, large part of the damage is in. They are one of the fastest growing mid-cap ITs, which is now looking to improve their implant as far as AI and this acquisition. And I think the not having any promoter is a very big boon. I would say that somewhere down the line there will be a big buyout, and that could actually be very, very positive. The stock has underperformed, and I would expect it to outperform whatever the scenario. Idea Voda is a clear place that the AB group has got re-rated, and I think that you cannot but make money, because at 40% of EBITDA and 142 ARPU, there is only place to go up. Now, despite any government or change or not, data and telecom is going to be in a very sweet spot, and I think they have all the three, incomings now. Good leadership which is going to see that they are in the fray, and a very good opportunity for investors to make money, with I think the balance sheet getting much more stronger over the next maybe 1-2 years.
Let's have your list. Firstly, what's on the avoid list completely in the election event, and what are your large cap, mid cap and small cap ideas?
So the avoid list is to look at avoid chemicals, which is overowned across the board. So that's a sector which has done really well. And then large capital good companies, because they've gone overboard. A lot of these stocks are at crazy valuations and crazy strength. If you look at overbought zones rather. So the risk reward is off. So that is a clear cut avoid.
Avoid ABB Siemens?
Yeah, all of them.
And L&T also?
L&T is not in the overbought zone. So ABB, Siemens, you can look at other smaller companies also in the same. Schneider Electric has gone way up. So across the whole capital goods space, this is a time to actually book profits. The ideas which I like, one is continue to like metal. So Hindalco is the new name, which has broken out of a 2-year cup and handle. Aluminium prices have bottomed out, started showing a rally. Very similarly, we were placed on, say, Vedanta when we were discussing. Copper was at $4. Now, aluminium could be the next trade, so Hindalco is one. Second, mid-cap idea is GE Shipping. That's a stock which has been in a strong uptrend. We are seeing a lot of volumes, bulk deals happen over the last few weeks. It's been sideways for the last 3-4 months. Decent enough numbers which have come up for the quarter. So the stock looks interesting, is more a neutral, market neutral stock, and not very well tracked or interest in. So that is second. Third is Delivery, which is a stock from the new age companies, which has gone through a 50% correction. Then we get through that 12 to 18 months of consolidation. Very similar to what happened at PB Fintech at 400 rupees or 50-70 when we were looking at Zomato. A very similar structure. The stock is absolutely listless for the last 3 months, almost at a 20-pointer range. So at 400, 450, this looks interesting as a turnaround story in the new age companies.
And you would buy these stocks irrespective of the election?
Yeah, so all these three names are irrespective of the elections.
Kunal, let me turn to you.
So I'll go with large cap names like L&T. I think that stock has been an underperformer in the last 2-3 months, and there could be a very strong catch up which could be at play for L&T. The risk reward is quite attractive, and the stock is still continuing to be exhibiting patterns of higher tops and higher bottoms. So I think that context, the trend is still very much intact for L&T. So 3800 could be a target for L&T, and stop loss at 3200. BHEL is the other stock, and I think that stock has gone through almost like a V-shaped recovery from 65, 66. I think just 2-3 years back, the stock is now almost on the verge of breaking 300 mark. So that's another stock which is looking attractive. 330 could be a target, and stop loss is 270. And the third name which is very interesting, and that's sprung up over the last 1-2 months, is Amara Battery and Mobility. That's a chart which has come back into a multi-year breakout above 1050, 60 odd levels. So that looks attractive for a potential target of 1200 and stop us at 1080.
And what's your avoid list, you said?
So it's sugar, chemicals and the underperforming names like paints, etc.
Okay. Sandeep, avoid. Let's discuss that first.
So avoid, I'll take cue from both of them and say paints and chemicals you should avoid.
Why?
Well, paints has all of us know with Grasim coming in, what's the kind of price pressure that's there in the market, and the companies, despite that competition, saw profit pressure this quarter. So I think this year and maybe next year will be tough. And once that plays out, then eventually I think some of these quality names like Asian Paints, maybe 12 to 18 months down the line will present buying opportunities.
They say you never say never. Now you don't know what the election verdict could be. If markets don't like the election verdict, do you think the fall in small and mid-cap stocks could actually be very excruciating? So as a strategy, just don't keep too many small and mid-cap stocks in the run-up to the election event?
Yeah, so I think the strategy will depend on what you bought and when you bought. So if you bought something very early, you are sitting on huge gains, so you don't want to just exit that thinking of a negative event. But if you are looking to allocate fresh money, then I think it makes sense to be a bit cautious, because you might be expecting something as a 95% event, but you never know what comes out. So to that extent, that risk is there. And in any case, the small and mid caps, the fancied names also have run up.
If you like this video, then like, share and subscribe to ET Now.